This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are calling this Super Monday, S-U-P-E-R, Super Monday, and for very good reason. It's going to be a big day and it's going to be power-packed lineup covering all that happens till market open and beyond. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. I don't know how to put this, you know. Should we call it, should we say, Ab ki baar 22,000? I mean, is that what we're talking about? Because it is really, I mean, I don't think anyone thought 3 out of 4 would be swept away by the BJP. Of course, the sentiment is so positive, right? And then this is perhaps something that the market was also pricing in, maybe, you never know. But big Monday lineup ahead.
Well, you know, from a bullish perspective, they'll be wondering, you know, if a fairy turned up and said, what's on your wish list? And they said BJP winning, the Fed sounding a little bit dovish, and the flows coming back as well. And they've got all of that. So it's a perfect scenario, actually, from a bullish perspective.
Absolutely. I think the global thing also, Nigel, as you mentioned, is very important because it's turning exactly around the same time.
Yes.
And let's just actually summarize very quickly the setup this morning, which is positive. I mean, you know, it's as positive as it gets. Now, landslide victories for the BJP in Rajasthan, Madhya Pradesh and Chhattisgarh. How is this different from, and we were saying this on Friday, I mean, if the actual results are significantly different from the exit polls, I mean, the market will react. And they are different in a good way. So, you know, in Madhya Pradesh, where the exit polls were given sort of the BJP and the Congress almost neck to neck, I mean, slightly ahead, it's a sweep. I mean, the scale of the victory in MP after 18 years of Shivraj Singh Chauhan at the helm of affairs, I mean, is unprecedented, right? Chhattisgarh is another state where, I mean, it was a bit of a seesaw yesterday through the course when the counting, etc., was happening. Congress was ahead, and then, of course, it completely turned around. Rajasthan, of course, exit polls, etc., were projecting that the BJP will be in pole position. What these state results show is that Prime Minister Modi and the BJP are in top form for 2024 general elections. It's not as if you can directly take these three states, the win in these three states, and extrapolate seats for parliamentary elections in 24. Because, you know, if you look at the MP seats in the last election, so these three states have 65 seats. Out of 65, BJP won 62. So it's not as if, you know, the party will, I mean, it could get all 65, but they're already there. But what it shows is that in terms of election fighting sort of capacity, and, you know, the popularity of the Prime Minister and, of course, the party and its policies, etc., is very high. Continuity is what markets were hoping for. And continuity, it's just become a little more surer that in May of 2024, we will have continuity. So that's the market reading of it. Now, just to sort of tie this straight back to the market, and we were talking about this over the last 2 weeks, I mean, especially last week, asking a lot of guests who were coming on, is the market sniffing something? A particular sort of outcome, because the Nifty had gained 500 points in the last 4 sessions going into this particular election victory. So I think some had an inkling of what's going on and the kind of mood on the ground which has led to this sort of you know, big sweep for the BJP in these big heartland states. Now, of course, even with this, the market will cheer this particular victory. We'll get to the levels, etc., in just a bit. But I think it's going to be a big day. Straight away, 250, 300 point kind of gap up start, and then we'll take it from there. Before I get to levels, that global bit, right? So on Friday, Fed Chair Powell all but confirmed that the Fed is done with its hiking cycle, the big hiking cycle, which has been about 500 basis points. And we can sort of get into greater details. But the implications has been that the 10-year lost about 11 basis points on Friday. And over the last 6 weeks, it's lost 80 basis points, the US 10-year. That is massive. You know, it's equally important. The political landscape is important, but I think the global landscape, where you're starting to get into a looser financial sort of situation, I think that is also extremely important. What are we likely to see? An across-the-board rally. I mean, I think that's a given when you have that big a move. Keep PSU stocks, not just banks, but across the board, but the public sector enterprises. And that index saw a big gain on Thursday and on Friday. So it's got momentum, it's got relative outperformance. So keep an eye out on that. And of course, this is the pack which is most impacted by potential reforms into the future, etc. Adani Group stocks, of course, are also likely to see gains today. The big question is what to do after a big gap up rally, right? That's the really big question. 250 points, what to do? Should you sell? And to answer that, maybe one can look at sentiment indicators. So one of the things, I mean, I don't look at this every day, but sentiment indicators can help in answering the question. For example, what are FIIs doing in index futures? So as of the last figure, which is Friday, FIIs are short 47,000 contracts in index futures, right? Last time, I mean, just to kind of assess where does this need to get to before sentiment becomes in an overstretched zone, last time when the Nifty topped out, which was in mid-July, FIIs were long 1 lakh contracts. They are short 47,000 contracts right now. So from minus 47, they've got to get to neutral, and then they've got to add long position. So, I mean, it's some distance away before we can kind of say that we get to some overstretched positioning. Of course, all of this can happen quickly over a couple of days with days like today, but keep that in mind. So I think, I mean, the answer is if you're invested, stay invested. Don't get FOMO about, I mean, if you don't own this or that. I mean, everything will do well over a period of time, and it's about relative gains over different sort of time frames. Just to sort of put in the levels, the Nifty medium-term resistance is at about 20,700. I think we'll start at about 2,600 or so is what the GIFT Nifty is indicating. The Nifty Bank closed above the 61.8% retracement on Friday. The next level for the Nifty Bank is 45,457, but I think the only one which matters is the all-time high, which is 46,370. That's about 3.5% away on the Nifty Bank as well. The GIFT Nifty will come up on your screen, and that should be giving you an indication of the kind of open we will get, which is 260 points. So it's going to be, as I began by saying, a super Monday. Sonia.
Oh, absolutely. And you know, the BJP win in 3 states is much better than what the exit polls were also suggesting. Yeah. So when we went home on Friday, after what the exit polls suggested and the market rallied, it's even better than that. So going into a very, very strong day today, I mean, of course, you know, Prashant summarized a lot of it, but just want to put a couple of more things into perspective. This BJP dominance is important from a market standpoint because it talks about stability, it talks about stability in policy making, and these are perhaps the semi-finals before the big elections that happen in the month of May. Perhaps a lot of it has been priced in. You never know because the Nifty has already gained quite a bit. So keep that in mind. But there is definitely a big boost, because of what happened overnight. Now, all major indices, remember, in our markets are at lifetime highs. The Nifty gained every single day in the last 1 week. And if you look at it, even global cues are solid. So we have nothing to complain. The Dow was up almost 300 points on Friday. And both foreign and domestic investors continue to buy in the cash market. So FIIs on Friday bought about 1,600 crores. And it's not a 3-digit figure anymore. It's 4-digit figures across the board, both FIIs and DIIs. So money is coming in thick and fast. If you're looking out for a couple of pockets, overall the market will rally. But some spaces like domestic consumption have been picking up. Autos, for example, have been doing very well. Even today, 2 stocks in focus, Hero and Eicher, both reported very good set of numbers in the month of November. Hero particularly, so it is an indication that the rural market is coming back. Hero saw a growth of almost 26% on a year-on-year basis. So good going for the market. It's a clean sweep from the BJP and something that the market likes, right? They like stability. They don't want political uncertainty. And I'm sure there'll be perhaps more money flowing in because of this.
Well, that's right. You know, Sonia, last week we briefly spoke about maybe the Nifty is headed to 21,000 odd. And there were 2 possible outcomes, right, that the markets wanted. One is the BJP doing very, very well in the state elections. That's happened. And the second factor is the US 10-year yield. Well, that's cooled off from around 5% to around 4.2%. So that's a big decline we've seen. And all this in a matter of a month itself. So both the cues, well, they are stacked up in favor of the bulls. And it's a kind of a Goldilocks scenario that's playing out from a bullish perspective. The Nifty Bank, that's finding its form. And that's really heartening because that's been the underperforming index. Year to date, you know, you had that index that was underperforming. Now, in the last 10 sessions or so, well, that started outperforming. And that's very, very good news because that's 30% of the index that's finally started performing. And that's going to be the key for the markets to move up from here on as well. What do the FIs do? Well, in Friday's trading session, we had a good session. There was some short covering and there was long addition as well. And now the long positions have moved to around 38%. And just pull up a chart. You know, in September, the long positioning had moved to around 45%. Then the markets got into a bit of a tizzy. Then at the end of the October series, you know, at the start of November series, the long positioning, well, it had come down to around 11% approximately. And now we're back at around 38%. What that's telling you is from October 26th till December 1st, you've seen a big short covering bounce that's taken place. And that's one of the key reasons why we have moved higher. Now I would like to see institutional flows pick up because the FI flows, well, the last 5-10 sessions, they've showed us the money. But given that you're going to have continuity at the center, you like to see those big flows coming back into our markets. Moving to the options data, the 20,200 put, well, that's fairly active. The open interest was up by closer around 30 lakh shares odd, which brings us to the support levels. 20,200 put minus 80, 20,120, that's the trailing stop loss. You need to trail it and move up from here on. The Nifty Bank, well, the 100 DMA, that's the near-term support, the fresh all-time highs. It needs to get out there. And finally, in 6 months prior to the election, we normally see a big rally. That's happened the last couple of times. This time around, what's in store and how much of it has already played out? So you need to participate on the upside. The markets are going to gap up. I think you need to, start buying those dips and just trail your stop loss.
Okay, start buying the dips and trail your stop loss. But let's not forget, right? Let's keep in mind that this market has gone up about 6% in the last 1 month, 5.5% to be precise. And in the last 6 months, it's a gain of almost 10%. So there has been a fair amount of run-up we've seen in this market already. But having said that, this is expected to be a bumper Monday of trade. So let's get started. We have a lot of commentary coming in for you. First up, Mahesh Nandurkar of Jefferies says that BJP's win in the 3 state elections of Madhya Pradesh, Rajasthan and Chhattisgarh is much better than what the exit poll suggested and reinforces the consensus expectations of a Modi win in 2024 national elections with a greater likelihood of 300 plus seats for the BJP. He says this boost to the investor sentiment should augur well for domestic cyclical sectors like banks, industrials, power, property and mid-caps. He adds competitive populism from both the BJP and Congress is also clearly visible.
Well, we've got more views coming in. Amish Shah of Bank of America Securities says that in calendar year 2024, the global economists expect a soft landing for the US, a policy pivot. Fed rate cuts from June 2024 are higher but manageable crude at about $90 a barrel, accompanied by weak US dollar and lower bond yields. He says these factors should benefit emerging markets with a revival in FII flows. Besides, he expects India's macro to stay robust, highest GDP growth amongst G20 countries, continued fiscal consolidation and curtailment in government GDP to debt to GDP ratio. Their base case for the Nifty is 23,000, which is about 15% higher from where we are right now.
All right, let's also get you some money market views on the rupee. B. Prasanna of ICICI Bank says the dollar was under pressure as weak data accelerated the pricing in of a rate cut and softened yields further. The rupee, however, remained in a narrow range, underperforming peers. The improved chance of a stable government in 2024 may bring investor confidence and foreign flows back into India. This, along with softer dollar and crude, will help the rupee to trade with an appreciating bias in the near term, though the RBI will be aggressive in preventing any sharp appreciation. He expects the currency to trade between 82.85 to 83.35 this week.
On bonds, we've got B. Prasanna, who says that global bond yields resumed softening bias post a brief consolidation owing to continued softness in economic data. Crude oil prices eased post-OPEC meeting as outcome fell short of expectations. Back home, local bonds underperformed on the back of heavy duration supply and continued tightness in systemic liquidity. With state election results favouring the incumbent party at the centre, he expects fiscal prudence to continue. Domestic bond market is expected to trade with a positive bias. 10-year is seen between 7.2 to 7.3%.
All right, well, we have a lot of stock-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We look at Hero MotoCorp, Eicher Motors, Tata Power, Hind Zinc, Vedanta, Alchem Laboratories, Syngene, and Strides, all of them on positive news flow. While on the flip side, you have CAMS and Siemens that could be reacting to negative news flow.
Ed Yardeni is with us, President at Yardeni Research. Ed, good to have you with us here. Good morning. If you've been following the local state election results here, that's the big talking point, has been for the last 24 hours. So a comment if you want to on it. And of course, at the same time, we've got something happening globally as well. Fed Chair Powell on Friday pretty much all but confirming that the hiking cycle is done.
Well, I guess the interpretation of what's going on in India with the elections is that it increases the odds of political stability. Financial markets always prefer financial stability, political stability, if possible. It would also be useful to have geopolitical stability, but you can't have everything. We've got obviously a terrible war going on between Ukraine and Russia and between Israel and the Hamas. But so far it stayed regional. Your point on the Fed Chair Powell, he said we're very much into restrictive territory in the Fed funds rate, which basically means that he thinks that the Fed really doesn't have to raise interest rates anymore. And so the markets have gone from will there be 1 or 2 more rate hikes instead to will there be 1 or 2 or 3 or 4 rate cuts next year?
All right, that's important, Ed. The point you made about financial and political stability is something that the market wants and perhaps in all likelihood will get with these assembly elections. So, as a global investor, right, as somebody who's watched the Indian markets for a long time, do you think this could be a big trigger for large sums of money to come into a market like India vis-a-vis a market like China for the next 1 year?
Well, I must tell you, my mother-in-law is doing a tour of India, and she absolutely loves
Oh,
it.
wow.
So so far the feedback is it's a great country, and one of these days I'll have to follow her and do the trip. But clearly, a lot's going right here for India. The political stability issue is important. The flattening and decline in interest rates, the fact that we're now talking about how much will interest rates fall instead of how much more they will increase is good for emerging markets, generally speaking. The geopolitical situation really hasn't affected the price of oil. So as a result, that has not been an issue for India because the Middle East clearly is most important to the global economy from the point of view of the price of oil. So I think all's going quite well. China and India are economic competitors, and right now India is enjoying some capital flows that might have gone to China in the past. As a matter of fact, China's President Xi was in San Francisco recently, and he basically sounded like he was pleading for foreign investors to come back to China. But I think at this point, foreign investors see a lot more positives in the outlook for India than they do in China. China's got a terrible property bubble bursting problem. And I wouldn't want to say that too many times. It'd be a tongue twister, but I said it once. So they've got issues with the property bubble and the aging demographics. India doesn't have those kind of issues. And so I think India may very well be a beneficiary of more foreign interest.
Hi, Ed. Good morning from here in India. And whenever you decide to visit India, we'll be happy to host you here in the studio as well.
My pleasure.
In the past, you have mentioned that India is obviously the preferred market in comparison to China. And India has been a beneficiary of this China Plus One. I'm wondering whether or not India is going to be the only one. Maybe the next couple of years, global investors will want to allocate money to India itself. So my question to you is, in the pecking order among global equities, where does India, stand? Point number one. Point number two, there are rate cuts that are being anticipated. And you told us the last time as well that you believe the Fed is done. How many are you penciling in?
I'm thinking that we're not going to have a recession next year. I've been in the camp, the soft landing camp, since early last year. And as a result, I remain positive on the stock market, maybe too positive in the first half of last year, but it's worked out reasonably well since October of last year. But I do think that that there will be two cuts, not four. I think the U.S. economy's proven to be quite resilient. I think inflation's coming down, but I think the Fed's going to be very, very careful about reviving inflationary expectations. And so I think they're going to be cautious next year. So I see 50 basis points altogether. I wouldn't rule out 100 basis points, but more than that, I don't think we'll see.
130 right now. So we'll, the markets are markets. They'll recalibrate and adjust as we go along during the course of the year. Ed, great to have you with us here. Thank you very much. Appreciate you being here on the program as always. We'll take a very quick commercial break here. We'll come back. Our list of top stocks to watch out for coming up next. Stay tuned.
Welcome back. If you're a bull, you'll be looking forward to market opening. GIFT Nifty suggesting a big gap up. But we've got plenty of stocks to focus on, so let's get straight to our top 10 segment. Sonia, you go first. Tell us about Hero Moto as well as Eicher Motors.
Okay, I'm going with green for both because Hero Motors numbers are very good for the month of November. Total sales growth of almost 26%. And this is important because it signifies that the rural market is picking up where Hero has a big presence. Domestic growth has been good. Export growth has been good as well, 33%. So going with green there. Even for Eicher, the Royal Enfield sales went up 13% year on year. Exports were up about 2%. But what this also talks about is that demand has come back. Consumption demand has come back in a big way in the two-wheeler space across most categories, whether it's the affordable, the mass market, or even 125cc plus segment. So I'm going with green on both these names.
Okay, all right. So green on both of them. But Vivek's joining by as well to tell us about Tata Power, CAMS, as well as Siemens. Morning, Vivek.
Well, good morning. Like you mentioned, quite a few stocks on the radar today on the back of news flow. First on our list, Tata Power. The company has managed to acquire Bikaner-Neemrana transmission project. This particular project was set up by a subsidiary of PFC named as PHC Consulting. The total project cost is over 1,540 crores and the expected end date for this particular project is 24 months from the start date. Now, the other stock that we are tracking, CAMS, could be in focus, could be a big mover into the session today. An affiliate of Warburg Pincus is looking to sell stake in CAMS, looking to sell up to 8% of the total equity. Remember, they held over 19.8% stake at the end of the September quarter. The base issue size is of 1,000 crores, which indicates a floor price of 25.50 a share, significant discount to the closing price. And lastly, like you mentioned, Siemens India. Now, there's been a further update to the inter-promoter deal that is expected. So Siemens AG is looking to acquire 18% stake from Siemens Energy. The share acquisition will be done at 29.50 rupees a share. And after this particular deal, Siemens AG stake will increase to 69%.
Okay, all right, Vivek, thanks a lot for that. Well, I'm looking at Hindustan Zinc as well as Vedanta. The last 10 days or so, the market was a buzz that something's got to give with regard to Vedanta. And now we know what it is. Hindustan Zinc, they'll be having a board meeting on December 6th. That's on Wednesday. And they're going to be considering a dividend. Remember, this is important both for Vedanta, that's the listed company, as well as the Government of India, because the shareholding between both of them in Hindustan Zinc is around 95% odd. And for Vedanta Limited, it's going to be rather crucial because most of that dividend will be passed through to the promoter entity as well. So it helps the promoter, that's Vedanta Resources. Expect both those two stocks to open up in the green. But Ekta is standing by to tell us some more stocks that are in the news. Ekta?
Thanks for that. Well, I'm watching Syngene as well as Strides. Interesting developments there where Syngene has concluded the acquisition of the biologics manufacturing facility in Bangalore from Stelis Biopharma, which is basically Strides' arm. Now, the gross consideration of the deal has been brought down to 617 crores versus 702 crores earlier. It's a reduction of 85 crores. That is because Stelis is going to retain a certain number of reactors which are not currently installed in the facility, so they've adjusted for that. Stelis received around 395 crores total. The proceeds will now be deployed along with cash to reduce debt on the books to the extent of 420 crores. The payment has also resulted in reduction of corporate guarantees issued by Strides, which is to the tune of around 800 odd crores. So it's definitely beneficial for Strides because now you're seeing that debt reduction come down on the books. And, Syngene is going to be paying less for the deal. So maybe both the stocks will be in the green. Separately, we have Alchem, which is in focus because their manufacturing facility was inspected by the US FDA. They were issued 3 observations. So the assumption is that the 3 observations won't be that serious. And hence, you can maybe see a little bit of green on Alchem also.
All right, thanks a lot, Ekta, for that. Let's take a quick recap of our stocks with positive news flow. Hero, Eicher, Tata Power, Hindustan Zinc, Vedanta, Alchem, Syngene and Strides Pharma. While stocks with negative news flow are CAMS and Siemens. But also let's find out what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. And all that glitters is gold. We're looking at an all-time highs of $2,149 an ounce. I mean, it's an all-time high that we've seen not just in COMEX, but the Indian markets have been hitting all-time highs as well. And various other countries like Australia, Taiwan, China, Japan also have been hitting all-time highs in case of gold in the global markets there. It is about, geopolitical uncertainty, weak US dollar, that seems to be driving the demand. Add to that the attack on American warship and commercial vessels in Red Sea. That seems to have led the latest drive into the market there. Within metals itself, it is copper that you need to keep an eye on. It's trading at a 4-month highs right now, and the other metals also have started to inch up. The only thing that's not doing so well and good for us as a country is the crude oil prices, down 2% in the previous week. It's trading below $80 a barrel. The markets feel that the OPEC and allies output cut perhaps may be only on paper and may not materialize on ground. That skepticism seems to be supporting, seems to be pressurizing prices rather.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. Prakash Devan will be with us to talk about, the market. It's going to be about individual stocks. It's always about individual stocks, but it's a broad rally that we are expecting. So Prakash comes up in a bit. We also have Madhu Kela, founder at MK Ventures, joining us in a bit from now to talk about his views from here over the next couple of months. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's do some fundamental analysis then on all the stocks we listed out for you. Prakash Devan joins us on the show. Hi, Prakash. Good morning and good times for the markets. We're entering a fresh bullish phase, it seems. I want to discuss a couple of stocks with you, though. Let's talk about Vedanta and Hindustan Zinc. The sense you got for the last couple of weeks is something's got to give. The promoter entity is going to do something. Now we know that Hindustan Zinc is going to be paying out that dividend. And the global setup as well is supportive for metals. What's your take? would you go ahead and buy Vedanta? Because, at these valuations, it's fairly attractive.
Good morning, Nigel. So absolutely, today's market is such that really people might end up making mistakes and still not getting punished for it. So this is a situation where even a stock like Vedanta, which has been under a cloud given the perilous situation the parent finds itself in, will probably start finding solutions, not maybe by design, by default. And this huge dividend payout that is anticipated from Hindustan Zinc is very logical. So this was on the cards, but the timing is quite interesting. It probably come to people's accounts much earlier than sooner than what was anticipated as the parent kind of starts gearing up for 2024 repayments. The other thing that's important for Vedanta on the positive side, Nigel, is global bond markets. If you see the kind of discounts that some of their paper was trading at, has actually gone out. I mean, that the discount is still there, but it's not as yawning as it used to be, let's say about 2 months back. So there is a semblance of hope and expectation that they'll be able to probably tide through with these repayments obligations, which are probably middle of this year and some of them early next year. So I think there is revival. And as you said, probably potentially the rally in the metal prices is also supportive. And if the US news flow continues to turn positive next year, early next year, then you will probably see a ferocious covering up on all metal prices. And then that's where Vedanta could benefit. But whether I would buy it, not as yet. I mean, if you're a dividend seeker, definitely it's a good opportunity or a good level. But from the medium to long term, it still has a lot of uncertainties around this. The market's giving you a far clearer fairway for a lot of other buys. So at this point, it might not be very well set in terms of the risk reward. But yes, the dividend is a big trigger, and that could benefit some of the people at this point.
The auto sales have been very good, Prakash, up until now. What are your thoughts on Hero MotoCorp, which has come back in a big way? I think it's the 4th consecutive month of sales above 4.5 lakh units, which is a big milestone for them. Tell me, would you buy the stock at this price?
So, good morning, Sonia. So you're right. This 25% kind of a difference on the higher side on a YOY basis is very commendable, which means it's almost like, the company is catching up with whatever slow sales that they had through the last year. The stock also hasn't played catch up, because if you look at a Bajaj Auto, or if you even look at a Eicher or a TVS, those stocks have rallied hard, and Hero was always probably playing the 4th slot. But this set of a number, it very clearly tells us that this is not a one-off. It's not just a good quarter that they've had, but probably they'll continue to see benefits from their repositioning of the portfolio mix. And that's precisely what the stock will start, pricing in. So from that perspective, I wouldn't be surprised if it actually rallies another 20-25% in the next 6 to 9 months. And then probably next year, we'll probably start catching up with the others at the same pace. But there is a lag that needs to be caught on to. And that's where the opportunity is. So it's a very good positional trade, not from a very long-term perspective as yet. But the Bajaj Auto stock tells you that it's probably closer to peaking out for some time at least. And this is if you recall, we spoke about Bajaj Auto struggling with overseas sales, exports number, Nigeria, and all of that. This was about 9 months back, but they made a comeback. The numbers have had a comeback, and so has the stock. The same thing will probably get replicated in Hero as well.
All right. In fact, talking about the auto companies, right, you have Maruti Suzuki that reported a 3% rise in their total sales in the month of November. Exports actually were quite good. They zoomed by about 16%. We caught up with Shashank Srivastava. Let's listen into what he had to say.
This double-digit growth that you saw in retails for November was largely because this time the festive season, a large part of it fell in the first fortnight of November. It was not there last year. So obviously last year numbers were post the festive season, whereas this year's number include the festive numbers. So I think that it's not comparable, and it's not probably reasonable to expect similar type of growths going forward. In fact, we do see growth flattening out in the next few months. Although, as far as the overall industry volumes are concerned, we still maintain the overall volumes to be around the 41.3 lakh number, which will be a growth of slightly above 6% over last year's 38.9 lakh for the year. We have just announced that we'll be increasing the prices in January. And one of the reasons for that has been the hardening of the steel prices. Last 4 or 5 months, there has been a hardening of steel prices. HR steel, for example, going up from around $680-$85 to almost $708 now. So also the CR steel is going up from about 64 rupees a kg to now past the 68 mark. So yes, with the increase in prices in January, we are still working out the details. We do believe that if the direction of the commodity softening for some of the other commodities continue, we could see a good improvement there.
Okay, well, that's management of Maruti. Well, as promised now, let's get back to the markets full throttle. Madhu Kela is now joining us. Nice introduction. He's founder at MK Ventures. Madhu, good morning. Great to have you with us here on CNBC-TV18 on this, we're calling it Super Monday, Madhu. So yes. It's going to be a Super Monday and hopefully, super next many months. But let's just begin by getting your thoughts on this, on the sweep that we saw the BJP sort of doing in 3 states. And Madhya Pradesh, it's significant after 18 years to come back the way they did. It's just quite something. Your initial thoughts?
So, Prashant, first of all, thank you so much for having me. I think these are the times which we have been dreaming for the last 30 years. And being bullish in India has really, really paid off. I can tell you with personal experience. So there are 3 things, Prashant. One, I think this event to an extent was not anticipated the way it came. Even none of the exit polls, none of the surveys could project this kind of win. So to this extent, I think it's a from a market perspective, it's a positive thing. Second, to my mind, it truly validates the good work which the current government has been doing for 8-9 years. And I think this kind of mandate, will push the development and inclusive agenda much further, going forward. So which is a very, very good thing from a market perspective. Third, Prashant, I think with this in the bag, now 2024 election, will look much, much more certain than it has ever looked in the past, that, the current government will come back. And the focus of the government over the last 10 years was, to clean up a lot of things. So next 5 years will truly, truly focus on the growth. I would go little further in saying that, while we talk about next 25 years of Amrit Kaal, so to my mind, next 5 years from a stock market perspective will be the real Amrit Kaal, post 2024 elections. And we're starting now because, now there is a much, much more certainty. So next few years, Prashant, are really, really going to be very good for India.
Madhu, so are you saying that from here going into the elections, right? Because the outcome, nobody really doubted that mishap in 2024, but the outcome of these state elections, as you said, has made it much more surer in that sense.
Exactly, so, it makes it much, much more certain, right? Otherwise that always the lingering thing was there. We don't know, right? Even though there is certainty, but this makes it much, much more certain.
Right. So what should we expect for markets? Today we will get a big gap up. If you want to comment, because the market did rally 500 points coming into this over the last 4 days, and we'll get a 250, 300 point gap up. It's going to be a big day. But then, more importantly, from here all the way into elections, should we expect something like what we saw in 2014? Rally back then started in October of 2013, but it was very different circumstances. The rupee was, if you remember, down in the dumps, and it was looking very, the mood was one of despair, which is not the situation right now. Can we have a rally going into 2024 elections, a meaningful rally?
Prashant, I don't know what you call meaningful. From my perspective, it is not a 1-2 month thing. Trust me. I think, I would like you to run through to your viewers what happens to any company once it hits a lifetime high, right? So here the whole market has hit lifetime high, and it has consolidated now for a real big period of time. So now, to my mind, what is really important is what is the, let's say, worst case downside. So we had 18,600, where the market really spent a lot of time, and after it has taken out with a force, and it has stayed here for a long period of time. So Prashant, I think, we are in for a couple of years of very, very good markets. Now, within this, whether you will have a 500-point rally or 200-point rally, or you will have a 200, 500-point decline, that I'm not unable to comment. But what I can clearly see is a phenomenal time for equity investors. The other point which I would like to mention, see, what is the biggest worry in the market is valuation, right? This is what is holding up people, that the valuations have become too expensive. There I would like to comment on two things, Prashant. One, that, yes, valuations are higher than what they have been historically so. But we should not miss a picture that the interest rates are stable, the growth is far more stable, the inflation is far more stable. So obviously, in these kind of scenarios, when there is no volatility in all of that, it will clearly lead to higher valuation. Second, very important point is that, there is a certainty of earning. So yes, if you look at it, valuation from a next 12-month perspective, they may look expensive. But there are people who are willing to have a 3-year, 4-year view. So with this certainty of earning in a lot of companies, if you take a 3-4 year view, then the valuations are not looking all that expensive.
Stretched. Okay. Madhu, hi, good morning. This is Sonia here. So, you put some very important points on the table. I just wanted to do a follow-up on that. Everyone talks about how this is a resemblance of the 2003 to 2008 phase. If this genuinely is that kind of a bull run, at what stage of that phase are we in right now? And how do investors approach it? Do you look at domestic consumption? Do you look at capital goods, the spaces that have not worked in a very long time? What's the approach now?
Yeah. So good morning, Sonia. Again, good to be here and interacting with you guys on such an important day. I would say that as my mentor Rakesh Bhaiya used to say, it is like a buffet. You eat what you want to. Just remember, you don't end up overeating, right? So I think there are lots of good pockets from an investment perspective, but with full disclosure, and this is just, everyone who is listening to me should do his own homework before investing. But I would say the financial space looks very compelling to me from here on a risk-reward basis, because these stocks have not participated in the last 12-18 months meaningfully. So there has been a lot of consolidation while the earnings are kept up. Here, there is a lot of valuation comfort which we have. And I would go so far saying that, we have always liked public sector banks over private sector banks. But now on, the bet is the mix of, public sector and also some private sector banks which have consolidated beautifully. And I would think that, one thing which the market is really missing as of today is the FII flow. With this certainty of election results, I wouldn't be surprised that the FII flows over the next few months really gets resumed. And when that money comes in, it will only go into large liquid companies. And I think banks will be on the forefront of recipient of this kind of liquidity from the foreigners.
Hi, Madhu. Good morning. Always good to see you in. And in fact, remembering the great man as well, Rakesh Jhunjhunwala, I remember a couple of years ago, he was saying Nifty could be at 1 lakh by 2030. Maybe that could be on the cards as well. So things are looking up for the Indian markets. But Madhu, you're making a very good point on these PSU banking names. And you were early in on some of those names and they've done well. But now you're saying maybe you could balance it out with some private sector banks as well. Let's talk about government themes that have actually done well. But how much more can they do? With the BJP almost certainly to come back to par in 2024, this capex spend theme is going to get a booster shot. Some of the stocks have already rallied big time. How would you approach it? Because in select companies have already participated, but they've already doubled or tripled. So your take out there.
So Nigel, again, good morning. Thank you for having me. I would say, Nigel, clearly PSUs are the leader of this bull run. We did some number crunching. In the last 3 years, PSU overall market cap, which was roughly 14 lakh crores, have surpassed 45 lakh crores, right? So on the whole, there is a 30 lakh crore rupees of value creation which has happened in the PSU stocks in the last 3 years since the bottom of markets happened. So clearly there is leadership. When the whole sector has gone up 3x, you can imagine there are a lot of companies which would have gone up, 5, 7, 8, 10x as well. So I think this market is clearly led by PSU as a theme. And we have been in the forefront. We've spoken many times about this theme. Second thing I would say, Nigel, is that, with this certainty of government at the center, given that it will last for many years, even beyond 2024, clearly, I think PSU stocks will gain out of that stability at the center. And if I look at valuation, Nigel, even though stock prices have gone up, but the valuations are not expensive. Let's just talk about, some PSU banks without getting into specific names also. I would say some of the banks, even large banks, even today, are trading at 4 and 5 P multiple on 2025-26 earning. I'm talking about large banks. Now, the people who have missed out this rally, they are still believing that the PSUs are inefficient and they will, there is corruption and there is this and there is that. वो अंगूर खट्टे होते हैं, ये वो वाली बात है. People, if they want to go and visit what some of these PSU banks have done on hiring, on technology, on retail distribution, it is a delight to see the kind of work which has happened in the last 5-7 years in this sector. Now, they are also at 17-18% ROE. They are also 1% ROA. How can you justify these companies trading at 4 or 5 P multiple when the market as a whole is trading at 18-20 P multiple?
Absolutely. Well said. 30 lakh crores from the bottom 3 years ago is the market cap accretion across PSU names, across PSU stocks, as you put it. Madhu, financials, PSUs, mix of some large private banks, etc., also in favor now. What else do you think? PSUs are the clear leaders, but what else? As you said, it's a buffet.
Clearly Prashant, one more thing which we have discussed many times in the past, where I don't think market is even now recognizing, even though the stock prices have moved up somewhat, are the infrastructure companies. Again, if you look at the order book of a lot of these infra companies, if you look at their performance in the last 2 quarters, if you look at the quality of balance sheet which is getting built up, and in my mind, with this certainty, again, that this good work will continue for the next few years, if not more. At least I can see visibility of that kind of time frame. I think these stocks are still trading at very, very compelling valuation. Some of the companies which we own and which we track very, 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 very closely, they are still trading at below 10 PE multiple on a 2-year forward earning basis. And when I look at even the ownership is not here. I have not seen too many brokerage reports thumping the table and buy on this sector. And there is a lot to choose here. And some of the companies are quite compelling, I would say.
I just have one final question. There was a point that a guest was making earlier, saying that India has 2 things compared to China, which I think, makes the argument for India stronger. One is a very young demographic, and 2 is sectors like real estate are picking up in a big way, which is not the case in China, right? China is seeing a big debacle there. Do you think these 2 things, along with others, could lead to more money being pumped into India compared to a market like China over the next 12 to 18 months?
Sonia, at least I don't have any doubt in my mind. I'm sure you are also smiling and you have no doubt, even though you are asking this question. I would say the flows, trust my friend, trust me, it is going to surprise all of us on the upside. And we have not yet considered the debt flows. With the inclusion of JP Morgan bond index and many indices which are not yet included, India on the bond side. I wouldn't be surprised if the flows really surprise the way markets have got surprised by this election victory in the last in 3 states. I wouldn't be surprised if the flow surprises the market in the similar manner over the next 2 years.
Madhu, just one last question. In terms of fresh reform impetus, this PLI schemes, etc., have been big wealth creators, right, across sectors. Would it still be focused on building out infrastructure, manufacturing, budget after budget for the last 3-4 years? That's where the big allocation has gone. So the thrust will be still that, in your assessment, briefly?
Yeah, I see no reason to deviate from there, Prashant. If you look at, in spite of whatever is being spoken, the government is really on a path where they are still in a physically very strong situation, and they are in a strong. They're going to get into a stronger position. You look at the tax collection, you look at the GST collection. So I think the capital formation model and the capital expenditure model, which is there in the budget, it is here to stay. And clearly, this verdict which has come, even for BJP as a party, is clear validation of the good work which is happening. It is clear validation of the feel good which is there in the country. So I see no reason why the government should deviate from here. In fact, in times to come, it is going to get even more stronger than what we have experienced in the 5 years.
All right, Madhu, we'll leave it there. It's a great conversation on an important day, as you said. Thank you so much for being with us here on CNBC TV18 first thing in the morning. Thanks indeed.
Thank you so much for having me. Thank you so much. All the best. God.
Thank you. Well, we'll take a very quick commercial break here. That's Madhu Kela. So the bull market is here for the next many years. And, it's looking good. Phenomenal time for equity investors. It has been, and it is likely to stay that way, as Madhu put it. We'll take a quick commercial break here. We'll talk about the near term, very short term. Mitesh Thakkar and Sudarshan Sukhani will be with us on the other side. More coming up in just a bit. Okay, welcome back. It's going to be a big day. We are about 6 minutes out from the pre-open session. Mitesh and Sudarshan are with us. Gentlemen, good morning. Good to have both of you here. Mitesh, let me start with you. It's going to be a big gap up. What are the best ways to make use of the gap up? What's the best trading strategy this morning?
So with that gap up, Prashant, good morning. I think the first idea would be to see if you want to book a part of your long positions. But that apart, the stock calls that I have a buy on ACC with a stop at 1880 for targets of 1955. A buy on Bharat Ford with a stop at 1140 for targets of 1210. Gas Authority is my next buy call. Keep a stop at 133, look for targets of 145. And Godrej Consumer is a buy as well with a stop below 1010 for targets of 1065. The only thing is that when you enter the trade after a big gap up, there will maybe wait tactically for a few minutes before some settling down of the trades come down, and then you enter the positions.
All right, Sudarshan Sukhani is also with us. Sudarshan, what a time to be in the market, right? Everything is going right for the market. Of course, you tend to get a bit worried about what happens next, etc. But just riding this phase right now, what's your sense? Will the up move continue, and what are the stocks to look at?
Absolutely. Stay on the long side of the market. Don't time it. Buy every dip, buy every consolidation. And the stocks are also something, there are stocks which are actually coming out of corrections and they are ideal for a buying opportunity. Bajaj Finance is one of them. Buy with a stop under 7120. Glenmark is another, coming out of a correction. Buy with a stop under 777. And finally, Lal Pathlab is actually breaking out from new highs. Buy with a stop under 2690. Just stay on the long side.
Okay, all right, gentlemen, thanks so much for joining in. We'll come back to you all for another call in the next 10-15 minutes or so. For the time being, though, we'll slip into a short break. We come back with pre-opening rates. We'll also have with us a political commentator and election analyst. We have Amitabh Tiwari as well as Rahul Arora will be joining in later to discuss plans with regard to how to approach markets post BJP's big sweeping victory. Stay with us.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Well, BJP has swept the Hindi heartland with a stunning victory in Madhya Pradesh, Rajasthan and Chhattisgarh. The Congress has found some solace with a victory in Telangana. But more important to understand is the political stability, the policy stability that the market was looking for. And that's what the market has got. And hence, we're expecting to see a big bumper opening this morning. But what are brokerages saying? Sudarshan joins in with more details and all of that. Sudarshan, over to you.
The ruling party in the centre, BJP, has got a huge boost in state elections. The Saffron party has registered a thumping win in the Hindi heartland states of Rajasthan, Madhya Pradesh and Chhattisgarh. On the backdrop of this, brokerages believe this result only strengthens the chance of Modi being re-elected in 2024 national elections. Motilal Oswal says results remove an overhang of political uncertainty over next 5 months. It believes that prospect of a pre-election rally is quite strong now. Motilal Oswal is positive on sectors like BFSI, industrials, real estate, auto and consumer discretionary. Jeffries says results reinforce consensus expectations of a Modi win in 2024 national elections. It prefers banks, industrials, power, property and mid-cap stocks. Philip Cap believes poll results and peaking interest rates globally bode well for FI flows. Its FY 24-25 Nifty EPS growth stands at 18% each. It likes industrials, cement, metals, pipes, automobile and EMS. Nomura says BJP state election wins should allay market concerns over political risks. And CLSA says it now expects both central and state governments to combat agri-inflation via price controls or subsidies.
All right. Well, that is what brokerages are saying. Now we have two gentlemen joining us, political commentator and election analyst Amitabh Tiwari and Rahul Arora, CEO at Nirmal Bang Equities, join us now to tell us what this means, both from the markets as well as the political standpoint. Gentlemen, morning to both of you. Thank you for taking the time out. Amitabh, I want to start with you. does this mean that 2024 is a sure win for the BJP? At least has the probability of that gone up? And what was your biggest takeaway from the announcement that came through yesterday, the win that came through yesterday?
So essentially, we all say it's a health warning that state election results do not mirror normally the national election results. But since these elections are held very close to the national elections, it's bound to give a psychological edge to the BJP, especially in the Hindi heartland. So these three states are very important because these three states are states where the BJP and the number 2 competitor Congress are locked in a direct one-to-one contest. And there are 200 seats of this nature in entire India. And it does give a peek into what could happen on these 200 seats if the elections were held today or in 3 to 4 months down the line. It also gives a sense of continuity to the market. See, these three states, if you see the market performance on the dates of previous election years, which is 2008, 13 and 18, there has been 1.5 to 2% movement in the markets on these result days. And this correlation of state election results to national election results did not materialize in 2018-19 block. However, the market would see it as a continuity of policies. These three states are not industrial states per se. They have more agriculture as percentage of their GDP, except for perhaps Telangana. But this gives an edge to the BJP and also clears some uncertainties regarding the fiscal policies and the guarantees which could have a bearing on the central budget if the opposition comes into power.
Hi, good morning, Mr. Tiwari, and good to have you on the show. Quick question with regard to maybe some saw it as a semi-final, maybe some didn't. And as you said, in 2018, it didn't play out in that way in 2019 when we saw the Lok Sabha. But we had Mr. Piyush Goyal at an event, on Saturday itself, and he sounded very, very confident. He said 330 is there for the taking. What do you think? BJP can do even better in 2024 in comparison to what they did in 2019?
See, I think the confidence comes from the fact that the Congress has not been able to defeat BJP. And these are direct contests. While the BJP may struggle in some states where the regional satraps are strong, it is these 200 seats where the Congress also is not going to get any help from the regional parties as they do not have a significant vote share here. And these are the seats which give confidence to the BJP that they could even cross the 300 mark. See, Modi is a man of records. I'm telling you now, the mission is 400 plus for the BJP in 2024. And he would try to even break the record of Rajiv Gandhi of 414 seats in 1984, which the Congress got in the aftermath of Indira Gandhi's assassination.
400 plus. No, I think that's well put. Man of records, absolutely he is. Who would have thought, right? MP especially, after 18 years, a verdict like this, it's quite something. Rahul Arora is also with us. So it's the economy, it's markets, it's political economy, really. Rahul, your thoughts, as someone who watches markets very closely, what does this mean?
So, morning, Prashant, and thank you so much for having me on the show. I think, in some ways, I think if you look at the last 7 cricket World Cups, Australia has won 5 of them. That's a 70% hit rate. And the BJP has actually won almost at a 60% hit rate over the last 5 elections from 1998. I think that tally is going to probably go up to about 70% after the next elections. I think, I don't know about the number of seats, but this has come as a real shock. So I think BJP will now emerge as the Australian team. It's so as to give you a cricket parlance, so to speak. If you look at UP, Bihar, which is the crux of the Hindi heartland, Maharashtra, Gujarat, and these 3 states that went to elections, and you add a Jharkhand, that pretty much takes you to the halfway mark. So I think in 5 months, unless something goes totally out of whack, I think this party is definitely coming back with an absolute majority. From a market standpoint, as I'm sure other guests have also told you, it ensures a lot of continuity. And I'll tell you what the biggest plus is, and why I'm very optimistic now for the next 5 years. The first 10 years of the current Prime Minister have been all about policy reform. GST, DMON, RERA, NCLT, IBC, bankruptcy code, all of that, right? I think a large part of his second tenure has been spent with putting India on the global map, right? Along with not just hosting the G20, but the kind of alliances that he's run up, particularly in the Middle East and sourcing of crude and all of that. I think the next 5 years, and it's not a question of when he comes to, if he comes to power, it's a question of when he does, could be a situation, Prashant, where if your 5-year CAGR GDP, so that the last 10 years under the Prime Minister, obviously it factors COVID, but the last 10 years average GDP has been about 5.7. If you're able to take that up to about a 7.5% CAGR, right, you're looking at this $3.6 trillion GDP this year, probably going to about $10 trillion in 10 years. This changes the dynamic completely as far as the stock markets are concerned. So it's a huge verdict. I think whatever comes today off the market comes, it'll probably settle into whatever it settles. But this increases the probability of the Nifty accelerating faster towards 25,000 than, say, probably where we left the market on Thursday. I think some people probably had an inclination that this would come through. Right. Obviously, you had a 7.6% GDP number to contend with, so the markets did well. But this changes the trajectory in a very, very material way from an economic standpoint. And like I said, if you get into a situation of 7% also compounded for 5 years, you're talking about a very different trajectory for the markets.
Well, Rahul, the last time we spoke, you were telling us that earnings are looking better. The yields are cooling off as well. And now you have this thumping victory. So whereas all the ingredients of seeing the Indian market really move up from here. But give us a couple of sectors that you'll be focusing on from here on. Now, namely, if you have continuity, you look at capital spent, infrastructure should do well. Railways could do well, defense as well. But some of them already done well. What would your be, in terms of a pick of the pack? So interestingly, Nigel, while obviously the government will continue to do what it does, I think the big global risk probably still remains a US recession. So I think while it's always good to talk about euphoria, I think it's always good to balance it out with risks, right? I think that is the call that everyone in the market got wrong for this current calendar year. So if that goes into a slowdown, the external environment may not be as conducive as it was from the export and import standpoint. I think government will continue to spend. The interesting part, and we just put out a piece on this recently, is that the CapEx announcements have gone down substantially in the first half. This can traditionally happen in a pre-election year because corporates probably want a little more certainty. And I think now you will probably see them go up in a very material way. But if you actually see the first half of this year, CapEx announcements are actually down by about 35%. Private sector is down 26%, central is down 35%, and states are down as much as 80%. All the projects that have been announced will obviously complete themselves, but I think now with some certainty they will revive. I think the one thing that could come back in a fairly material way is consumption. Right, I think if this means more jobs in the hand of people, especially the working class and at the bottom of the pyramid, you alluded to the event that Piyush Goyal was at over the weekend, at the IBLA Awards. There were talks about per capita GDP going to $15,000 and $20,000, right? If that happens, that changes the consumption dynamic quite dramatically. So I think that's probably one space to watch out for. And while everyone will focus on the headline, you could probably go one down and say, well, if all of these things are going to happen, you're going to need cement. So I think cement could potentially be another sector that could potentially do well. So I think these two potentially linked to the election outcome. Maybe a third one, which is probably not linked to either the US recession or this outcome, but I don't think too many people are talking about it, and could be a contra sector for next year, could be chemicals. I think this probably not a bad time to be starting to nibble into chemical stocks. You want to give us a couple of names in the past you've mentioned, if you want to play the real estate theme, one indirect way could be cement, and I think JK Lakshmi Cement was one. You like Polycab as well. So give us a few, top 3 picks from your end.
So I think, Nigel, if you're playing it through cement, I think we like Ambuja and Ultratech in the large cap space. We do like Ramco in the mid caps and Birla Corp in the small cap space. I think there is reasonable room for earnings expansion in these, and those are certain names that we are fairly confident on. Polycab obviously has had a dream run, so I think we've actually downgraded to an accumulate, but I think structurally we remain positive. But I think when you come to chemicals, because you've seen a price and time-wise correction, and we're of the view that destocking will probably continue for the next couple of quarters, but that's probably the time to buy into it, is our sense. I think, you buy good businesses when they're going through tough times. So you could look at an SRF, maybe a few percentage points lower, maybe 22, 2300. So fluorination has a good space, so Naveen. And maybe if you probably go down the market cap chain, I think Fine Organics and Neogen also look interesting to us. So I think these are few, in these sectors. And if consumption revives and, you get an uptick in volume growth, you should definitely have one of Britannia, Tata Consumer or Nestle in your portfolio. It's a no-brainer. One of them. You don't need to have all three. And if consumption revives, then you could go back to the erstwhile names like Lever, which you're going to getting a 5% plus kind of volume growth. That could be one dark horse to play.
You know, there's 3 minutes to go for the market open and the pre-open session. The sensex is up 950 points. And you've got the Nifty, which is up 20,600 plus, by the way, on the Nifty right now. Maybe just take a look at the PSU Bank. Just run through a few names, right? I mean, the PSU banks, for example, maybe the PSU Bank index itself, take a look at it. The Adani Group stocks is going to be another pack. The PSU Bank index is up 2.6%. But today it'll be a day when you'll have lots of indices that up, 1, 2, 3%. Enterprises is up 8%. Ports and, the other names, Adani, Total, etc. should come up as well. So this is a, big move up across the board for that bunch. And maybe just look at the top Nifty gainers in the pre-open, just to give you a sense of the scale of move on some of these large caps which are coming through. The Nifty is deferred a little bit. The Bank Nifty has been the weaker, but and I'm sticking to large caps because mid caps and small caps, they've been on cruise control in any case. I mean, they never stopped making new highs. Even on Friday I think was the 15th straight session of a new high for the mid-cap index. I mean, of course, the small-cap index has been even stronger, but they've got another 1.5% kind of gains coming through here. So it's, if you remember that the day when you had that corporate tax cut, I mean, the closest I can remember is that. I mean, you basically opened, so many stocks opened 10% higher because you had that direct benefit translating to that 10% sort of advantage in as far as the tax incidence is concerned. Rahul, any other sort of names or things you'd like to bet on even after this kind of a start? You mentioned PSUs, Prashant. I think that could be a very, very interesting trade. I think if you look at, let's take the largest lender in the country, SBI, right? It's still operating at an 18% ROE, coming to you at what, 1.1, 1.2 times. I mean, what could be better than that? I mean, if this goes up, if you take the multiple even to 1.5, you get almost a 30-35% upside on that market capitalization, which could actually end up being huge. And this could probably extend to some of the other PSU banks like... Yeah, no, absolutely, Rahul. Sorry.
Yeah, that's fine. I understand. Yeah, please go ahead.
The open is with us 1.5% higher is what we have on the Nifty. And you got what, 280 points is what that translates into. So we are above 20,500. This is a moment of reckoning we've been waiting for since we got the election results yesterday, and it doesn't disappoint. So almost 300 points on the index is what we have, Nigel.
Well, that's right. Stocks that are doing very, very well. From the Nifty pack itself, the Adani Group stocks, both Adani Enterprises and Adani Ports, well, they're off to the races. They're up between 6 to around 10% odd. Other couple of names. You have NTPC as well as SBI. Both of them up between 3.5 to around 4.5%. Coal India as well up close to around 2%. So some of these PSUs doing very, very well. And obviously when the markets are up 280 points, you don't have a single stock from the Nifty pack that's trading in the red. A couple of big movers and, volume-based movers. You have Adani Power that's up 8%. You have a couple of other notable names. Bank of Maharashtra is up close to 4%. Suzlon is on the top volume list, up close to 4%. And IRDA, after listing, well, the stock has doubled and it's doing well as well. Massive volumes in the first few minutes. Also keep an eye out on Thomas Cook. Volume very, very high for the first couple of minutes. So safe to say, what a start. We were up 330 points. We're still holding with a gain of around 280 points. And the breadth of the market is absolutely stunning. 20 stocks advancing for just one stock that's declining. Wow.
Wow, what a start, right? Super Monday it is. And this is on the back of...
Say it. Nigel, say it like you say it. Wow, I mean, what is it?
Just looking so elegant, so beautiful. Looking wow.
Okay, that's back then. But fabulous run for the market, right? Look at that. Almost 300 points higher now for the Nifty. Sensex up almost 950 points. And this is on the back of a huge rally that we've already seen. Just a couple of more stocks. The Adani Group stocks, by the way, are surging even in the broader markets. Adani Power Ports are the biggest gainers, about 5 to 8% higher. You have all your power stocks. Orient Green Power is in the green right now. Union Bank, Suzlon, PNB. So PSU banks as well as power stocks are doing very well. Defense is picked up in a big way. BEL is up about 3.5%. Bank of Maharashtra up about 3-4%. So all in all, you'd have to say a very, very good start to the market. Whether this lasts, whether we build on to these gains, of course, time will tell. But for now, we are just rejoicing the fact that the Nifty and the Sensex have scaled record highs today. So the sensex, by the way, the grand old index, is now inching towards that 70,000 mark. You know, we would be talking about times of when I remember, the late Rakesh Jhunjhunwala would say 1 lakh on the sensex before you know it. And at that point, it would seem like such a faraway target. We're almost there. We're almost at 70,000 on the sensex. Who would have thought that this pace of growth would be really fast compared to, at least what we've seen in the recent past?
I think 1 lakh, I mean, it wouldn't be a fast stretch to think that, in the next couple of years or so, we get there just going by basic compounding of 15% or so. But obviously, some signs of, excitement this morning. But you compounded 15%, you're there.
Oh, absolutely. And, 50, we kind of, with the markets we've had, we scoff at 15%. But 15% over long periods of time,
it's a big thing.
Take it with both hands. Absolutely. Rahul, great to have you with us here. Thank you very much for your time, and thank you for joining us on an important day like today. Thanks indeed. Just a few other names I'd like to take note of before we go any further. We basically have 4:1 in terms of advances to declines ratio, so it's looking solid. And I think the top 6 gainers, and I was making this point right in the morning at 8 o'clock. So it's a mix. It's going to be a mix of PSUs and Adani stocks. So the top 6 volume-led gainers are all Adani names. And maybe just the intradays should come up. Enterprises, so up 8%, power 7%, ports 5%, green 9.5%. You got Adani Total up about 6% as well. So, off to the races straight off the bat on this one. Then you get to the PSUs, right? I mean, and it's just not PSU banks, but public sector stocks across the board. Union Bank is up 4%. And as we were saying, this is not going to be a news kind of day where stocks react to this or that in terms of, and there's not very much news flow in any case. It's a broader market day. So Union Bank 4%, HPCL starts about 5% higher. You've got, what else? Hindustan Zinc, which is up 5%. You've got Thermax, which starts up in a significant way on the upside, and so on and so forth. Looking good. And maybe a look on the downside as well. Tata Technologies is down 5%. It's coming up, I think, as you guys mentioned, with large volumes. I mean, actually, I'm not sure if there's been a big block or anything, but it's got some pressure. Z is down about 1.5%, 262 on Z. KPIT Tech, Apar Industries, and Gandhar, which was also, by the way, the listing on that same day when Tata Tech listed. Gandhar is down about 2.5% as well. So, yeah, that's the... it's 4:1 and looking pretty solid. 260 points in the Nifty. Sonia.
We always talk about the here and the now, right? Talk about individual stocks. But if you just recap what all has worked for the Indian markets, there's so much. I mean, the list is really long. We were talking about how GST collections are at all-time highs. Growth has picked up in a big way. Inflation is at a 5-month low. And then, a lot of these commentators were making the point about the younger demographic and all of that. So put together, there is a lot that's working for this market. And now the cherry on the cake pretty much is the political certainty that we've got after the state election win. But Prashant,
there's the global aspect as well, right?
Yeah.
I mean, it's looking benign. It's looking actually for the first time in a very certain way. It's looking benign, with the Fed chair himself saying that the hiking cycle is done. I mean, unless of course inflation shoots up or anything, but that's not the likely scenario.
Absolutely. In fact, Prashant Khemka is joining in. He's a founder at White Oak. So let's pose this question to him. Prashant, thanks a lot. It's really a fabulous time to be an investor, a trader, to just be in this market, right? And soak in the kind of wealth creation that has happened over the last many years and months. How are you feeling at this point in time? And do you think that this is just the start of a structural upcycle in this market?
No, thank you. Thank you, Sonia, for having me here on the show today. I was just listening to the last few minutes of what you were talking, but as it seems all the stars are aligning domestically as well as globally, and you enumerated several of them, including the GDP, strong GDP growth, the benign inflation. Inflation never really got to a problem stage in India of the kind that it was globally, but still good to see that. And the biggest uncertainty in investors' mind, to the degree it was uncertainty, I think prior to the day before, people possibly ascribed a low to mid-single digit probability of some electoral shock in a few months' time. I think today that's become a further fraction of that probability, and that's what you're seeing in the market reflected today. And a lot of global investors who were sharpening their pencils and wanted to be ready after the central elections, I think would prepone their decision making to maybe this month or next month, as it's around year-end time frame. So I think that factor, to the extent that it's relevant, is also positive. And as Prashant was noting, the Fed is as reflected in the longer-term bond yields, which have come down sharply off of 5% to closer down to now 4%. So I think globally as well as domestically, stars are aligned for stronger economic growth and hence a stronger than expected corporate profit growth over the coming few years. And it would likely, it's not that the market's has been oblivious to all this. Market has firmed up over the last November itself was a very solid month. And now with the outcome over the weekend, I think it can gain further strength from here.
Pull up a company called Dilip Bilkon. It's up 10%, 11%. Dilip Bilkon, it's a contractor, infrastructure company, based out of Madhya Pradesh. And that's about at about 432, coming up with very large volumes for this point of the day. We don't usually see it, so just pointing that out. Look at Novama, Novama Wealth, by the way. Citi this morning has put out an initiation report on Novama Wealth with about a 35% upside. So, the street has also been active with sort of widening coverage across a host of sectors where there was little by way of coverage. And look at Gokuldas Exports. Gokuldas Exports is now 4 digits for the first time. So it's 2002, 2003, stocks up 5% and looking very, very strong for this point in the day. Prashant is with us. Prashant, good morning. Prashant here. So what are the best ways to play this from here? What can you buy and sit and hold? And, not trying to get in and get out, etc. What looks structurally good from here?
Certainly, I think, as Sonia was saying earlier, I think it's likely to be more broad-based. 70,000, 75,000. We might, before the central elections, see the sensex cross its, diamond jubilee mark, if you will. So it has to be, I think, more broad-based. But we are finding, particularly given where the prospects are and where valuations are, particularly attractive at this stage is a lot of financials across the market cap segments. Financials has so far not participated as much in the rally this year, but I think they're very well poised, given all the environment, the economic environment that we talked about. They're very well poised on the valuations when you compare them within other sectors, within India, across other sectors, or when you compare them to financials across the world. Particularly, comparables. You can't compare to developed market financials, which trade at a big discount for a good reason. But where you compare them to comparable companies, Indian financials are trading very attractively at this point, we believe. Consumer discretionary, several segments of consumer discretionary should do very well as we move, let's say, over the next few years from, and I'm not talking just 3-6 months, as Prashant, you said, somewhat longer term, where you can sit. I think select consumer discretionary names as the economy moves from 3.5 trillion to 5 trillion, let's say, over the next 3 to 5 years. A lot of the wealth creation that happens would go towards, is not unlikely people are going to buy a whole lot more toothpaste and soaps, but the discretionary items are likely to see acceleration. And then capital goods, select high quality capital goods, because there's been a lot of, and I caveat that because there's been a very sharp rally in capital goods segment, unlike financials and consumer discretionary, which haven't participated that much in the rally so far. Capital goods have seen a sharp rally, but yes, there's a lot going for capital goods, but you have to be more selective. And at this point in time, I would say some of the best quality capital goods still should do very well over the coming years. So those segments, besides what I said, generally there are opportunities across board, but these are segments where our team is finding a greater proportion of opportunities, if you will.
All right. Hi, good morning, Mr. Khemka. Nigel on this side. The point you made on financials is rather important, not just from that sector perspective, but because 30% of the Nifty wasn't participating year to date. And in the last couple of weeks, well, that started outperforming, which is obviously good news for the Nifty, which has to trend up from here. From the financial SPAC, what's your preference, Mr. Khemka? In the past, I think you were leaning more towards private sector banks, and valuation-wise, some of them are looking delicious. So how would you position yourself, between the private, public sector banks, maybe NBFCs?
Yes. No, very true. I think private sector financials always present a very fertile opportunity set for us over the years or even over the decades. I would say that's been a favorite hunting ground. And I would stretch it beyond just the banks. So private sector financials more broadly, including non-banking financial companies or the NBFCs, but including non-lending companies also, which includes insurance, but including non-balance sheet companies as well. So capital market intermediaries, which don't have a balance sheet business, but more provide service, those are some fantastic opportunities across the spectrum. Yeah, as wealth grows, people, besides consumption and spending, the savings also grow and the investments also grow. And many of these companies are in pole position to capitalize on that growth very profitably. And valuations, as you mentioned, Nigel, this year have lagged, and valuations for very strong, high quality financials on a relative basis, relative to where the rest of the market is and relative to where the rest of the world is, are very compelling at this time, in our view.
Okay. Yes, but the only question is valuations for individual stocks have gotten a bit expensive, right? So where do you or how do you generate alpha in this market? That I think is the big question, Prashant. What is your view on which are the pockets, which are the companies that you can invest into now that will help you generate alpha over the next couple of years?
No, very, very good point to make, Sonia. Some of the stocks have gotten stretched, and we've spoken about this before as well. I think there are pockets of stretched valuation, particularly in domestic deep cyclicals, particularly in small caps. So if I were to name them specifically, one has to be very careful. These are areas, obviously, where the macro looks very exciting. Only when macro looks very exciting do you have such a valuation stretches. So like, be it power sector, be it defense sector, anything related to railways, and there are other such domestic cyclicals. The deeper the cyclicality, the farther have the stocks gone this time around. And you have to be just cautious. I'm not saying all of them are going to be losing money going forward, but you have to be cautious because some of the biggest losses also over time would be made from these SPACs. And you have to be super selective in terms of the quality of the business, quality of the management, governance, balance sheet at this point in these particular segments. And you contrast that with what we're talking about, financials. They're also cyclicals. They may not be as deep cyclicals, but they're also, if the economy is to do well, from where we are today, if you look at this dichotomy, I would say strong, solid financial companies would do far better than some of these deep cyclical stocks that have gotten overstretched.
By the way, the market is at the day's highest point now. So it looked like there was some tapering off, etc. But we are 300 points plus on the Nifty, and the high's been made at 20,602. We're at about 2572. So this is a triple century for the Nifty, which is coming now and looking still very, very good across the board. Prashant, you were talking about consumer discretionary. I believe you guys like Kalamandir, Sai Silk. If you want to just talk to us about that, I mean, as a thesis, right? We had, by the way, we spoke with the management. We had the promoter and, of course, the next gen here at the time of the IPO opening. What's the thought process? I mean, just to give us a sense. Yeah.
So, Prashant, as you know, we can't talk individual stocks, but more broadly, if we talk about consumer discretionary, as you know, is a bit of a hodgepodge of a sector. The index makers, when they cannot find any particular sector that a company belongs to, they either put it in consumer or in industrials, depending on whether it faces it's a consumer-facing business or a B2B business. So consumer discretionary, when I say it broadly includes, retail, an example of which you pointed out, but also includes media, auto, and several other categories. And in each of these segments, there are very exciting opportunities. In our portfolio, there are several, the team likes several retail companies. Like I would say financials in retail also, execution is of paramount importance. So we look for companies which have had a long track record, demonstrated track record of strong execution. And that can be across large cap, mid cap, small cap, and it can be retail. We don't have specific top down or philosophical bent towards a particular type of retail, meaning a particular category of retail. But in retail in general, there are some very exciting opportunities available across segments. When I say across segments, in retail, for example, there are a lot of names in jewelry, there are a lot of names in general retail, there are a lot of names in electronics, and so on and so forth. And across various categories, the team has identified companies which have very strong execution and have robust growth opportunities. They're gaining market share from unorganized sector and also within organized sector. Despite having a strong position, they're further gaining market share. Some of them are very large, and those names we're very well aware of, and some of them are much smaller at early stages. But depending on the execution valuation, there are opportunities available.
Got it. Prashant, thanks a lot for stopping by. Very, very big day for our markets, right? A momentous day where we have not only hit new highs for the sensex and the nifty, but it's also been a big political victory for the BJP in the assembly elections, and hence that brings more policy stability to the market, which the market always likes. Thanks a lot for joining in. Well, CNBC-TV18 is celebrating its 24 years this week. So the first management for the day is REC. The stock has surged more than 211% this year so far. Do note, in the 8 months of FY24, the company's disbursals have jumped to 1 lakh crores versus 46,000 crore rupees on a year-on-year basis. To discuss opportunities in the renewable sector and thermal capacity addition, we have Vivek Kumar Devangan, who is the chairman and managing director at REC. Mr. Devangan, thanks a lot for joining in. Appreciate your time here on CNBC-TV18. I want to first talk about the renewable energy space because that's the big focus area for the government. India has a target of 500 gigawatts of renewable energy capacity by 2030. What is the opportunity for a company like yours, and where do you stand right now?
We have very huge opportunity. Right now, we are at the level of 180 gigawatt capacity of renewable energy, or we may say non-fossil fuel-based capacity. This has to increase to more than 500 gigawatt in the next 7 years. So it means that 320 gigawatt capacity would be added. And since renewable energy is intermittent in nature, will require to have storage solutions like pump storage, hydro projects, battery energy storage, and if commercially viable, hydrogen fuel cell also. Then associated evacuation system for this renewable energy in terms of green energy corridor would also be required, and new technology areas like green hydrogen and green ammonia are also emerging. A preliminary study has been carried out by technical arm of the Ministry of Power, that is Central Electricity Authority, that this entire initiative, the entire ecosystem development will require total funding of about 30 lakh crore, and debt financing would be to the tune of about 21 lakh crore. REC is targeting a humble pie of about 3 lakh crore in this overall business opportunity which is available in respect of renewable energy segment.
Okay, that's some very helpful numbers. So you're saying that the total funding of 30 lakh crores is required, and REC is targeting 3 lakh crores in the renewable energy space. Can you help us with some immediate numbers? Because I was looking at the disbursement growth. It's been very good in renewable energy. Totally, I think year on year, the growth has been 90%. Sequentially, it's been 180%. What kind of immediate disbursement growth do you see by the end of FY24 and 25?
Yeah. Last year, our overall disbursement was about 97,000 crore. And in the first 8 months itself, we have crossed 1,03,000 crore. And we hope to close this year by the end of March 2024. Our disbursement will definitely increase more than 1,50,000 crore. And in the next financial year, FY25, we aim to disburse about 2 lakh crore. And about 30% of this will come from the renewable energy segment.
Interesting. Hi, sir. Good morning. And thanks so much for joining in. Well, in terms of your AUM, The last recorded number, I think, is around 4.7 lakh crore approximately. And the last time we chatted, we were talking about a vicinity of around 4.85 to around 5 lakh crore AUM by the end of this fiscal. You're pretty much already there. And as you're saying, disbursements are really picking up. So where do you end this year with in terms of an AUM target, point number one? And I think renewables as a percentage of your book is roughly around, what, 6%? And from a stock market perspective, they see it going to mid-teens. If yes, by when?
Yeah. Let me tell you that our asset under management at the beginning of this financial year was 4,35,000 crore, which had seen year-on-year growth about 13%. But in the first half itself, at the end of Q2, our asset under management had grown to about 4,74,000. That is about 20% growth. And we hope to maintain this growth of 20%. And our asset under management at the end of this current financial year will be more than 5,10,000 crore. And we had made an assessment. We had made a conservative assessment earlier that our asset under management will grow to about 10 lakh crore by the end of 2030. But if we are able to maintain this growth trajectory of 20%, our asset under management will grow to 10 lakh crore by the year 2028 itself. With regard to share of renewable energy in our portfolio, you rightly pointed out that the renewable energy portfolio is only about 6% of our asset under management. But as I had told you, that we are aggressively pursuing the renewable energy financing, and we have a huge pipeline of projects. And we hope that our renewable energy portfolio will grow by 10 times from present 30,000 crore to 3 lakh crore by the year 2030. So that would be about 30% of our asset under management.
All right, just a quick follow-up question then on the NIMs. You know, they're holding around that 3.5% odd mark, but you're looking at diversifying a little bit from what you have been, you know, to the sector that you've been lending in the past as well. Give and take everything, what's the cost of funds and what's the outlook on the NIMs from here on?
Yeah, as you have seen that Government of India is giving push to the infrastructure financing. Current year in the central government's budget, they have proposed that 10 lakh crore is going for infrastructure sector itself. And I hope that in the coming year, since India is planning to become a developed country by the year 2047, the investment in infrastructure sector is going to grow. Now, coming to our cost of fund, we are trying to reduce our cost of fund. It was at the beginning of this financial year, it was about 7.28%. Now, with use of our innovative financing and hedging techniques, we have been able to bring down our cost of fund to about 7.17%. That is reduction of about 11 BPS point. And we are targeting to bring down our cost of fund to about 7% by using innovative hedging techniques and external commercial borrowing. Recently, we had done road shows in Tokyo, Hong Kong, and London. We have got a very good feedback from our investors, and we are planning to bring green bonds to raise low-cost funds. And there is another segment that is 54 EC bond, which is a capital gain saving tax instrument. There also, there is a huge growth, and we hope to bring down our cost of fund to about 7%. With regard to our net interest margin, we are targeting to hold on to about 3.5% or 3.6%, which we are 100% confident to hold on.
Okay.
So, good morning, Prashant here. You know, is there any risk on the horizon, sir? I mean, with lending institutions, and this is because the incremental fastest growth will come in the renewable segment, which is not new, but it is newer as compared to the age-old thermal, right? So models will evolve, demand, supplies, I mean, everything is going to be in a state of flux for the next many years till we get to a steady state capacity there. What's the risk? Are these loans backed by individual assets? I mean, is there any risk as you see it?
There is not much risk except that some technological challenges are there in respect to renewable energy segment. Like for green hydrogen and green ammonia space that we have started financing, the cost of electrolyzer needs to come down to bring down the cost of production of green hydrogen. Right now, it is coming around $5 to $6 per kg. So I hope that a lot of research and development is going on, and the moment we are able to bring down the cost of production green hydrogen to about, say, $1 per kg, that is the one challenge. And second is the storage solution. Cost of the storage solution has also to come down to make the injection of renewable energy into the grid sustainable. And this storage solution like hydrogen cell could be a good source of storage.
So would you say that a lot of the lending that you are doing, it is contingent on technology bringing the cost and making renewable power more affordable, essentially?
Yeah, the scale of operation will increase. We have already started at the present level of technology which is available. The scale of operation will increase by manifold the moment this cost of technology comes down.
Okay. I have a couple of questions. This 10 lakh crore AUM target that you gave us, is there any fundraising that is needed in order to achieve this target?
Yes. Like current year, I told you that our disbursement target is about 1,50,000 crore. Our board in the last meeting, which was held on 30th of November, we already increased our borrowing limit to 1,50,000 crore. So per annum, we'll have to borrow about 1.5 lakh to 2 lakh crore in the next 5 to 6 years.
Per annum, you have to borrow 1.5 lakh to 2 lakh crore in order to meet this target, right? Is what you said. Got it. The other thing, can you tell me what is the visibility for FY25 in terms of the ROE for the business? What kind of ROE are you looking at?
ROE for business, we are looking for more than 20%. It may go up to 22-23% for the FY25.
Okay, 20 to 23%. Just one final question. This fundraising that you're going to be needing per year, will that be via the equity route?
Yeah, actually, we use multiple sources of borrowing. First is this institutional corporate bonds, which we raise from the domestic market. That is about 39% of our borrowing. The second most important is external commercial borrowing, the share of which is about 28% of our total borrowing. This share of external commercial borrowing is likely to increase because with the use of innovative hedging technique, we have been able to bring down the cost of external commercial borrowing. The term loans from the bank, domestic bank, that is also, that share is about 20%. And the share of about 54 EC bond is about 10%. With suitable mix of our different financial option, we are planning to bring down our cost of the borrowing and raise the sufficient fund which is required for our disbursement.
All right, we'll leave it there. Thank you very much, sir. Great speaking with you here on CNBC-TV18. Good luck. I mean, the stock's been doing phenomenally well, not just yours, but PFC as well, and another 4.5%. We must take stock of the market as well, because, I mean, for those who are tuning in now, 300 points is what you have on the Nifty. So at about 20,565 is what you have going on. The PSU stocks are doing well, Adani Group stocks are doing well. Look at something like a GMDC, which has come into the mix, 5% higher on GMDC, if you can have that up. GAIL is up 4%. These were not there in the morning when we were taking stock. You've got, that's GMDC. Let's have, the other one, which is, a GAIL. Manappuram should come up on your screen, 4% higher on Manappuram. Cyient is up about 5%. And you got Inox Wind, which is up about 5% or so. It's broadening out. Barbecue Nation should come up. We were talking about QSR with our guests earlier. Barbecue is up 12%. It's a big move on very large volumes coming through. And I think I already mentioned what's happening with Goldilocks, which is in 4 digits. Now, we'll take another quick commercial break here. We've got another special conversation lined up. Mr. H.M. Bangur, chairman at Shree Cement, will join in for a chat on the business. Stay tuned.
Welcome back. Well, the markets are holding well, and as CNBC-TV18 is entering its 25th year this week, the next management in focus is Shree Cement. Channel checks suggest that there has been some kind of repetition in terms of pricing as well as demand in the month of November, but that's on a high base. To discuss what's the way ahead on demand as well as on pricing, well, Mr. H.M. Bangur, the chairman at Shree Cement, joins us on the show. Hi, Mr. Bangur. Thanks so much for joining in our birthday week to celebrate our journey as well. And what a journey it's been for you as well, Mr. Bangur. I've known you for close to 13 years. I recall in early 2000, well, the company was almost sold at maybe 1,200 to 1,300 crores. And today we are sitting with a market capitalization of close to around 1 lakh. So it's been quite a journey, and we are glad to be part of your journey as well. And we thank you for being part of ours. Well, let's focus on the cement space first up, sir. You tell us about demand as well as pricing. I understand that in November, there was some kind of a slowdown, maybe because of the festive season, elections in various parts as well. But how do you see things panning out, both in demand as well as in pricing, in both your key geographies, that's North and East?
Every year during the Diwali season, from about 15 days from Diwali, 12 to 15 days, because Chhath Puja is there, and most of the laborers anywhere comes from this background, from Jharkhand, Eastern UP or Bihar, where Chhath Puja is very important. They go home, and then by the time they come back, there is nobody to consume cement. There is shortage of manpower. Now, seasonality is not the thing. So we feel that 3 days prior to Diwali to 10 days after Diwali, about a fortnight is lost every year. This year, everything was in the month of November itself. It was not split. The month of November was definitely much inferior compared to last year, because last year this was in October. So October was that much up. October, when you see the numbers, so we should see October, November put together, we are up by 10% or so. So we are happy about it.
Okay, all right. Mr. Bangur, you know, when you joined us the last time around, you told us in terms of volume growth, I think you were looking at early teens, maybe a 12% volume growgrowth for FY24. And you also said that EBITDA will look up in the second half of the year, but you didn't quantify it. How much better can EBITDA in the second half of the year be in comparison to what we saw in Q2?
First half of the year, our volumes are up by 14%. And second half, the volumes were already high. So I gave the yearly estimate of 12% higher for the whole year. We still maintain it. Okay. As far as EBITDA is there, we expect definitely better, because absolute volumes will be better. Costing has come down. The prices are good. But in commodity, any estimate about EBITDA is the last thing which the promoter can predict. You people can predict better. We can give you all the efficiency numbers, production numbers. But one thing which is price, what will be the future price in February, we don't know.
EBITDA will improve is what you're telling us.
We expect more than 20% EBITDA growth in the second half.
EBITDA per ton will be 20% higher in comparison to first half? No.
No.
Absolute number.
Absolute number.
Okay, got it. You know, since you want to give us, maybe some matrix or some parameters, on a kcal basis, what is the, cost of power? What was it in the first half, and what is it likely to come down to, if you have that rough number?
Coming down to 175, about 1 rupee 85 paisa or so is the cost of fuel in the net calorie value. Last year it was 2 rupees 60 paisa.
Okay, Mr.
So
Bangur,
it has come down sharply by 30% or so.
Mr. Bangur, good morning. You know, volumes have gone up by 10%, you said, in October and November. I just wanted some more qualitative details on where you're getting the maximum volume growth from, because so many spaces are performing at the same time, right? Government is doing a lot of work ahead of the elections. You have the real estate sector, which has come up in a big way. Where are you seeing the maximum amount of demand traction from now, sir?
Apart from these two, what you have said too, I will not like to repeat it, those are right. But apart from that, high net worth individuals are putting their own bungalow in third and fourth small cities or villages. Now that is also a big demand, and there only the best quality, highest rate cements are being sold. So we also have entered into the better quality cement with better price and better margin.
Okay. Mr. Bangur, I have to ask you on this. We had another large deal that took place last week. Maybe some would think that It had to happen. It just was a question of time. Kesoram getting folded up into Ultratech Cement. Did you have a look at that asset?
No. In fact, our hands are full till 2027-28. We are at present 48 billion ton, and we have tied up the cement units which we are to put. So by 27th March, it will be 71 million. 28th March, it will be 80 million ton. Till that, so we don't have the band space to acquire more. Our hands are full with new and greenfield and brownfield units.
But Mr. Bangur, you know, I have my ear to the ground and I believe there are still a couple of assets that are for sale. Are you looking at any of them as of now? You know, organically you're telling from around sub 50, you're going to go to 70, then you're going to go to 80, 2028, you'll be at 80 million tons, is what you're telling us.
Right.
But any inorganic acquisitions you're looking at as of now, I believe there are 2 or 3 assets that are still on the block.
We are looking at it, but the market is quite aggressive. We will be paying so much and no more. So we don't think that there is a realistic chance that we get it. But that is all. Otherwise also, India is a growing economy. It needs continuously more cement. So some new units will come. Changing hands will not generate more capacity.
Okay, but Mr. Bangur, you're saying you're looking at an asset. Now, at least you don't leave us at that. Just tell us a little bit more. Where is the asset that you're looking at in terms of inorganic growth? Is it now north or south, east or west?
In fact, I have not said. I said if it comes at a rational value. Otherwise, we are not really looking at it.
What is a fair value according to you if you're looking at inorganic growth? Will it be $80, $90, $100? Till what extent are you willing to pay on an EV per ton basis?
It depends on area to area. In South, we think $80 to $90. In Central India, it may be $110 also.
Oh, okay, $110. Got it. So that's a fair estimate, $80 to $110 per ton. There's a probability that Shree Cement could be interested in inorganic growth. Final question then, before we let you go. There was this IT survey that was done, a few months ago. And on the back of that, there was a bit of a, the markets were a little bit nervous. Has there been any communication coming in from the IT department on this?
No communication is there. And most likely, they will be giving the communication to our assessing officer, that what is their finding. No communication will be given to us.
By when do you think that things will get resolved? By the end of this fiscal, do you think there should be some kind of clarity on this front?
Yes, I think most of the things are clear and we don't find ourselves in any stress.
Okay. All right. Always a pleasure talking to you, Mr. Bangur. Thanks so much for joining in. So for the year, you're guiding for around 12% volume growth. And the EBITDA, absolute EBITDA in the second half will improve by close to around 20%. Always good speaking to you, sir.
All right.
Yes.
Mr. Bangur, thank you for joining us, sir, and pleasure speaking to you. Well, the market still continues to be on fire. Just look at that. The sensex is now inching towards almost 1,000-point bump up, and the nifty is not giving up on the 20,500 mark just yet. We have Mitesh Thakkar who joins in now. Mitesh, your thoughts on how to approach the market for the rest of the day, and what are the stocks to look at?
Yeah, good morning again. So, on Friday, we had penciled in that possibility of 2550 is there on the Nifty. It's been done. The good thing today is that we got a weekly gap up. And I think, if the gap doesn't get filled, which means that if we don't start getting below 20,200 again, I think this market should now look at targeting 21,000 over the next few days. So stay positive. I think, use declines to buy into it. The banks have kind of come back with a lot of strength today. We've been talking about the bank Nifty getting into momentum zone. I think that's happening. There is a minor pivot at 45, 900, 950 zones. I think once that is cleared, the bank Nifty could also target its all-time high at 46,230. So staying positive over there. In fact, I have a buy on ICICI Bank, which I would recommend buying with a stop at 960 for a target of around 1,000 to begin with, and maybe then we'll look at higher levels over here. And the other stock which I like is Kotak Bank, which after a long time has come on the buy list. There's a buy with a stop at 1760 for targets of 1825.
What about individual stocks? What are we looking at?
Yeah, I just counted Kotak and ICICI Bank.
Okay, Kotak and ICICI Bank. Got that. Sorry, I just missed that. I also wanted your thoughts on some of the auto stocks that are hitting fresh highs now. M&M is at a fresh record high. And you know, this has been a year that belongs to auto names. Anything that you would see, you would buy afresh now?
Not yet. I think, because all these auto names, as you highlighted, especially TVS Motor was the leading pack, and Bajaj and Hero Motors have also been doing very well. So they've run up a lot. I think, the way, if you want to buy from a trading perspective, is to wait for a consolidation or a pullback and then enter.
Okay, all right. Mitesh, we'll leave it there. Thank you very much for that. We'll take a quick commercial break here. The big story, of course, is the spectacular rally we have on our hands with a near 300 bump on the Nifty. We are back with what's happening in the commodity space. By the way, gold has been making new highs. Is that what Manisha is going to get for us on the other side? So the commodity corner with Manisha coming up in just a bit.
Well, Manisha Gupta is joining in now. She'll put the spotlight on the commodity markets. Manisha, over to you.
Well, thank you for that, Sonia. All that glitters is definitely gold, and we have seen the prices hit an all-time high this time around yet again in COMEX. Actually, in the opening trade itself, we saw the prices jump up by $75 an ounce. I mean, the liquidity also was slightly on the lower side, so you will have to give it to lower liquidity and higher price moves that we saw into the markets there. But it clearly has been an all-time high, and this is in case of COMEX that the street clearly has been waiting for a long time now. Because in this year, we have seen all-time highs already being created in case of China, Thailand, Japan, Korea, etc. India has been making all-time highs since last week as well. So it was only a matter of time that we saw that happen in the international markets as well. So the Indian prices today have hit an all-time highs above 63,500 rupees per 10 grams. It has been a very strong gain when you look at the prices here. The markets have been looking at the prices in 2023. This is what we've done in sense of prices in this year. We started the year with 1823 of a low. We did see 2051. All-time high for gold is 2078 until then. And then we saw the prices crash all over again up to 1810. And in the matter of last 1.5 months or so, we've seen prices gain from 1810 to 2150. I mean, that's nearly $250 of a jump up that we've seen in case of gold prices in less than 2 months there. Well, the prices did gain 2.7% in the month of November. And before that, October saw nearly 7% of gains coming in that case as well. Well, the support comes in on the back of geopolitical uncertainty, the weakness in US dollar. The dollar index, remember, declined by 4% in the month of November. And that is where the max gains came in from as well. And then there has been an attack on American warships and commercial tankers within the Red Sea. That has added to some geopolitical support as well. And there is a World Gold Council report that says that almost 24% of all central banks have said that they will increase reserves in gold in the next 12 months. Last year was a record high. This year until now has been record numbers in sense of gold buying from global central banks, and that has been supportive as well. And then the street is looking at the CME Fed Tool Watch, which suggests that there is a 97% probability that there will be no rate hike in the month of December, 60% probability of a rate cut in March, and an 80% probability of a rate cut coming in for the month of May. And that clearly is bullish in case of gold. What the street is looking for in this week now is the non-farm payroll data coming in from US. Near-term directions would come in from that.
Right, Manisha, thanks very much for that. So that's commodities in focus. We'll take a very quick commercial break here. We'll come back. We connect with CNBC-TV18 Citizen Monetary Policy Committee. The RBI will announce its monetary policy on Friday. My colleague Lata will take that conversation forward with CNBC-TV18's MPC.